For the first time in the 35-year history of International Living's annual Global Retirement Index, Greece has been named the best place in the world to retire, making a remarkable jump from 7th place last year to the top spot for 2026. And the internet went completely sideways. Videos, articles, blog posts, Pinterest boards, every retirement publication on the planet dropped a piece about Greece's 7% flat tax on foreign income, the golden Mediterranean light, the 30 euros dinners for two, the affordable islands. The coverage was wall to wall. The coverage was also, in several critical ways, incomplete. Here's what most of those videos didn't tell you. Applications for the 7% tax regime are submitted once a year between January 1st and March 31st. There is no rolling admission. Miss this window and you wait until the following year. They didn't tell you that non-EU citizens must obtain a valid Greek residence permit before applying. They didn't tell you that to qualify for the FIP visa, your main residency route as an American, you need to show a minimum monthly income of 3,500 euros or roughly $4,100 at current exchange rates. And they absolutely didn't tell you that in 2024, apartment prices in Greece increased by an average of 9% annually. Not 9% total, 9% in a single year, 3%. Greece is genuinely extraordinary. We're going to prove that with hard data. But we're going to do something the rankings didn't. We're going to give you every number you actually need, every deadline they buried, every catch the algorithm didn't want them to mention, and exactly who this works for and who it doesn't. Because for the right person, with the right income, and the right timing, Greece in 2026 is one of the most compelling retirement opportunities on Earth. For the wrong person, with bad information, it's an expensive mistake. Stay until the end. We're going to tell you the exact income level where the 7% deal stops making mathematical sense, and what you do instead. 1. Earned for its affordable lifestyle, excellent private healthcare, accessible visa options, and Mediterranean climate. We also pulled from official Greek tax authority AADE publications, the Bank of Greece property market reports, current FIP visa requirements from active immigration law firms on the ground in Athens, and real-time cost data from Numbeo and Spitogatos, Greece's largest property portal. We did not take any publication's word for the 7% regime requirements. We went to the primary sources, and what we found was a meaningful gap between what's being published and what's actually true right now. Let us establish exactly what happened and why it matters for you right now. Greece's rise to number 1 marks a shift in Europe's retirement landscape, said Jennifer Stevens, executive editor of International Living. Portugal's signature NHR tax deal, the one every retirement video from 2022 raved about, is dead, closed to new retirees. Spain has no special pension tax regime. Italy's flat tax option, once comparable to Greece's deal, now costs a minimum of 200,000 euros per year for the main applicant, which is not a retirement tax break, it's a wealth management product. For pension income over 40,000 euros annually, Greece's 7% rate is among Europe's most attractive. That's the honest competitive landscape. With more than 8,000 miles of coastline, hundreds of islands, and over 300 days of sunshine a year, Greece offers retirees a high quality of life at a surprisingly modest cost. One International Living correspondent who retired to Corfu 4 years ago reports living comfortably on the equivalent of about $3,400 per month and paying less than $300 per month for private health insurance covering both herself and her husband, while paying out of pocket for routine care that has never topped $1,200 in a year. That's $3,400 total monthly spend for a couple in the EU, on a Greek island, with private health coverage. Do that math against what the same life costs in coastal Florida or Southern California. The gap is not small. Greece takes the top spot this year because it offers that rare mix of attainable comfort, rich culture, and everyday ease. European destinations made a strong showing in 2026 overall, with Greece, Portugal, Italy, France, and Spain all ranking in the top 10. But here's the thing about Greece being number one. It means the crowd is coming. Greece's number one ranking for 2026 is likely to accelerate trends already underway. Stevens herself believes prices will rise as word spreads. The window the rankings opened is real. It is also not unlimited. Hold that thought. We'll come back to it in the property section, and the numbers there will clarify your timeline in a way no other video has. This is the section most retirement videos get wrong. Not slightly wrong, structurally wrong in ways that can cost you thousands of dollars and a full year of your timeline. Let's go piece by piece. What the 7% regime actually? Under Greece's non-dom tax regime for pensioners, the flat rate of 7% applies to all foreign income, including pensions, dividends, bank interest, rental income from foreign real estate, and capital gains. That is comprehensive. Your Social Security, your IRA distributions, your 401k withdrawals, your dividend income, your U.S. rental income, all of it sits under one flat 7% rate. The non-dom status lasts for up to 15 years. 15 years at 7%, regardless of the amount. Compare that to the standard Greek progressive income tax rate. Regular income tax in Greece is taxed on all worldwide income with rates up to 45%. If you miss the 7% regime and default to standard taxation, the math becomes very different very fast. The lump sum mechanics, and this is what nobody explains. The tax must be paid as a lump sum for each tax year by the last business day of July. It cannot be offset against any other tax liabilities or credit balances. Once this lump sum tax is settled, it fully covers the individual's tax obligations on the specified income, with no additional liability required. What this means in practice: you don't file a Greek tax return that calculates your rate on each income source. You apply for the regime, it gets approved, and you owe a single lump sum payment once a year. No itemizing, no Greek accountant doing line-by-line calculations on your 1099s. One payment. Done. BUT here is the minimum, and every video misses this. The minimum annual tax under the pensioner non-dom regime is €7,500 plus €500 for each dependent. €7,500 minimum, mandatory, every year, regardless of how small your income is. Here's why that matters for your math. If your total foreign income is €50,000 a year, about $55,000, 7% of that is €3,500. But the minimum payment is €7,500. That means you pay €7,500 either way. The 7% rate only becomes mathematically beneficial once your annual foreign income exceeds approximately €107,000. The level at which 7% of your income actually exceeds the €7,500 minimum floor. If your income is below that, you're effectively paying a higher effective rate, not 7%. This is the calculation no retirement publication is running for you. We just did it. Write that number down. €107,000 annual foreign income is the approximate threshold where the 7% rate becomes genuinely advantageous over the minimum floor. Below that, your actual effective rate is higher. The application window, the one that blindsides people. Say it out loud. Applications are submitted once a year between January 1st and March 31st. There is no rolling admission. Missing this window means waiting until the following year. All applications are processed centrally by the Ministry of Finance in Athens. If you moved to Greece in April, perfectly legally, fully documented, with your FIP visa in hand, and you miss the March 31st deadline, you wait. You live in Greece for up to 9 months before you can even apply for the tax regime. During that time, you are a Greek tax resident with no special regime protection, subject to standard progressive rates. This is not a technicality. This is the most common expensive mistake American retirees moving to Greece make in their first year. The prior residency requirement and the discrepancy you need to know. Here is where we need to address something directly, because different sources are citing different numbers, and that creates real confusion for Americans planning this move. To qualify for the non-dom status under the main investor/HNW provision, you must not have been a Greek tax resident for 7 of the previous 8 years. However, for the pensioner-specific 7% regime, the requirement is to have not been a Greek tax resident for 5 of the past 6 years. These are 2 different tracks within the same broader non-dom framework. The pensioner track, the one most American retirees are using, requires 5 of the past 6 years as a non-Greek tax resident. If you've never lived in Greece before, you clear this automatically. But if you lived in Greece, worked in Greece, or paid Greek taxes at any point recently, get a Greek tax attorney to verify your specific timeline before you apply. The penalty for applying when ineligible isn't just a rejected application, it's a clawback of the preferential rate. The non-EU citizen sequencing. This is the step that trips everyone. Non-EU citizens must obtain a valid Greek residence permit before applying. Several pathways exist depending on your situation, including the golden visa for those making a qualifying investment, or retirement-specific permits. The right permit depends on your nationality and personal circumstances and should be discussed with your Greek advisor early in the process, as obtaining it takes time and must be in place before the 7% application can proceed. Read that again. You cannot apply for the 7% tax regime without a valid Greek residence permit already in hand. As an American, that means you cannot do this in one step. You must get the permit first. Then you apply for the regime. Then you wait for the January to March window. This is a multi-stage process with real sequencing requirements, not a form you fill out and a tax rate that activates. The double taxation wrinkle for Americans. Do not skip this. U.S. citizens must continue filing U.S. tax returns regardless of where they live. Greece and the U.S. have a tax treaty that allows a foreign tax credit on U.S. returns to offset Greek taxes. This means you're dealing with 2 tax systems simultaneously. Your 7% payment to the Greek government can be used as a foreign tax credit against your U.S. federal tax liability. But the interaction between the U.S.-Greece tax treaty, Social Security taxation rules, IRA distribution treatment, and the Greek 7% regime is not simple. That's the core, quote, Greece retirement tax feature most U.S. retirees care about, but it's optional and conditions matter. This is not a situation where you watch a YouTube video and self-file. You need a cross-border tax specialist, specifically someone experienced in both U.S. expat tax law and the Greek non-dom regime, before you move, not after. Although Greece does not officially have a specific retirement visa, there is one outstanding option, the Financially Independent Person Visa, or FIP. This is the primary route for American retirees who don't want to make a property investment. Here are the exact current numbers. The income requirement. The financial requirement was significantly updated in 2024 and has remained stable through 2026. To qualify, you must demonstrate at least 3,500 euros per month in passive income as a single applicant. This threshold rises proportionally with dependents. A spouse increases it by around 20% and each child by about 15%. Let's run the numbers you actually need. Single American retiree, 3,500 euros per month, approximately $3,850 at current exchange. Married couple, 3,500 euros plus 20%, €4,200 per month, approximately $4,620. These are not the amounts you spend each month in Greece. The average monthly cost of living in Greece for a single retiree is approximately €1,000 to €1,500. With an average cost of living of around €1,000 to €1,500 per month for a single person, Greece provides retirees with good value, especially in terms of healthcare and lifestyle. The €3,500 FIP income threshold is what you prove you earn. Most of it stays in your account while your actual spending in Greece runs far lower, but you must prove the income. A Social Security check of $1,900 a month doesn't clear the FIP bar. $1,900 plus a pension, plus investment distributions, that's a different calculation. Run your specific income number against €3,500 before you build a plan around this visa. The savings alternative. Alternatively, you can demonstrate enough savings to last for the duration of the 3-year visa, €126,000 in savings for the main applicant, €151,200 for a married couple, or €189,000 for a family of 4. This is the option for retirees whose monthly income doesn't reach €3,500, but who have substantial retirement savings. Show the bank balance, demonstrate it's accessible, and you can qualify on assets rather than monthly income. The process, step by step. Before applying for the FIP residence permit, you must first obtain a Type D national visa from a Greek consulate or embassy in your current country of residence. You apply for the D visa in the US. You then travel to Greece. Once there, before your D visa expires, you file for the FIP residence permit. The visa is granted for 3 years and can be renewed for 3 years at a time, as long as the applicant continues to meet the financial requirements. After 5 years of temporary residency, you become eligible for permanent residency. After 7 years, a Greek passport, EU citizenship, the right to live, work, and retire in all 27 EU member states. The refusal rate. Don't ignore this. The refusal rate for FIP visas remains relatively high due to stringent financial requirements. For example, salaries are often deemed less secure than pensions, and applicants must ensure their funds are clearly documented. Income that looks obvious to you, investment account statements, rental income, dividend payments, may be rejected if not presented correctly in Greek administrative format. Hire a Greek immigration lawyer before submitting. The upfront cost of a lawyer, typically €1,500 to €3,000, is cheap compared to a rejected application and a missed March 31st tax window. The 183-day requirement, and WHY-IT matters. The FIP visa requires you to legally live in Greece for at least 183 days a year. This is not a vacation visa or a snowbird arrangement. You must spend the majority of your year in Greece. For the 7% tax regime, spending at least 183 days per year in Greece is required to qualify as a tax resident. If you spend most of your year in the US visiting family, traveling Europe, or maintaining a US home, this requirement creates a genuine compliance risk. Track your days. This is not optional, and Greek tax authorities are not casual about it. Many retirees who buy property in Greece apply for the Golden Visa rather than the FIP permit. The Golden Visa grants residency through real estate investment. Unlike the FIP, it allows you to get Greek residency without any minimum residency requirement, unlike the FIP visa. You can own your property, hold your Golden Visa, and spend most of your year wherever you want. That flexibility is real and it's valuable. But here are the current investment thresholds, and this is where several popular videos are using outdated numbers. The Golden Visa investment options currently include €250,000 minimum for properties being converted from commercial to residential use or for the restoration of listed buildings. 400,000 euros minimum for a single property of at least 120 square meters in rural areas or less populated cities and islands. 800,000 euros minimum for properties in Athens, Thessaloniki, or islands with over 3,100 residents. That 800,000 euros threshold for Athens and the major islands is the one most videos are not quoting correctly. If you've seen a video citing 250,000 euros as the threshold for buying in Athens or Santorini, that information is out of date. In high-demand areas like Greater Athens, Thessaloniki, Mykonos, and Santorini, the minimum investment has risen to 800,000 euros, about $940,000. This is a meaningful change from the prior universal 250,000 euros threshold, and it rules out a significant percentage of Americans who were planning around the old number. The critical new rule, short-term rentals. Golden Visa properties acquired after September 1, 2024 cannot operate as short-term rentals, eliminating a primary income source for residency-seeking investors. If you were planning to buy a property, get your Golden Visa, and offset your costs through Airbnb income, that plan is now illegal for new purchasers. Long-term rental is your option. This changes the investment return math significantly for anyone who built their budget around short-term rental income supplementing their retirement. This is the section nobody writing a glowing Greece's #1 article in December 2025 wanted to lead with. But it is the section that matters most if you're deciding whether to move in 2026 or wait. 69% year-on-year in Q3 2025. In 2024, apartment prices in Greece increased by an average of 9% annually, confirming the country's steady growth in real estate prices. According to the Bank of Greece, property prices in Athens rose by approximately 32% between 2018 and 2022 alone. 9% annual increase. Added up, Athens has seen 88% growth in the capital region from 2017 to 2024, with international buyers now accounting for 40% of transactions and 80 to 85% of all property purchases nationally. What does this mean for a retiree with a budget? It means the window is measurably narrower than it was 3 years ago, but not closed. Secondary cities, certain inland towns, and remote rural areas have seen softer increases compared to the capital and islands. The best places to retire in Greece are often not the ones topping Instagram lists. Secondary cities, inland towns, and under-the-radar islands are where affordability and quality of life still align beautifully. For 2026, Crete and Syros are ranked as the best value-for-money destinations. Other affordable choices include Naxos, Lefkada, and Thasos, which provide high quality of life without the over-tourism prices of the more famous spots. Where the rental market actually stands. Rents have increased at a much faster rate than households' purchasing power in recent years, Marini reported in December 2025. Quote, "Those who rent are experiencing a decrease in disposable income." That is a Greek news outlet writing about a Greek housing affordability crisis in December 2025. Greece is not immune to the same forces driving rental costs up across southern Europe. The tourism economy is enormous. 7 million tourists visited in 2024. High tourist demand and short-term rental income push long-term rental prices upward for everyone, including retirees looking for a 12-month lease in a desirable neighborhood. The honest budget in specific locations. Let's put real numbers on specific destinations, not ranges from 2022. Athens, specifically the neighborhoods of Koukaki, Neos Kosmos, or Chalandri. A furnished one-bedroom in a safe, walkable neighborhood runs 700 euros to 1,000 euros per month currently. 2 years ago, you'd find similar for 500 euros. That trajectory is real. Thessaloniki. As Greece's second-largest city, Thessaloniki offers a lively atmosphere with a mix of rich culture and modern living, and compared to Athens, it welcomes retirees with a more relaxed pace of life. A furnished one-bedroom in Thessaloniki currently runs €500 to €800, 8% year-on-year. Still more affordable than Athens, but appreciating faster. Crete, specifically Chania, Rethymno, or Heraklion, Crete is often considered the best Greek island for retirement due to its mix of beautiful landscapes, mild climate, and affordable cost of living. One American couple bought a two-bedroom house for $150,000 in Kritsa, a village in Crete, in 2023. Chania is where British and German expats have quietly built lives for over a decade. A furnished one-bedroom in Chania's Old Town or surrounding neighborhoods runs €550 to €850, 3% in Q3 2025 year-on-year, among the fastest appreciating in the entire country. The affordability window is not permanent. Peloponnese, Nafplio, Kalamata, or smaller coastal towns. This southern region is filled with beautiful nature, beaches, and history. Places like Nafplio and Kalamata offer a peaceful, small-town feel with great food and sea views. A furnished one-bedroom here still runs €400 to €650, the most affordable tier of Greece that is also genuinely livable for a retiree with full access to services. This is where the €1,000 to €1,500 per month total budget still works without compromise. Greece scored particularly high in climate, healthcare, and housing, categories that reflect not only its natural beauty and quality of care, but also the welcoming culture that helps newcomers feel at home. Greece offers both public healthcare, accessible after obtaining AMKA, and affordable private options. Private health insurance runs €60 to €200 per month depending on coverage. AMKA is your Greek social insurance number, the equivalent of a social security number for healthcare access. Once you have legal residency and your AMKA, you can enroll in the public national health system. The public healthcare system, called the National Health System, or ESY, offers free and subsidized treatments. The honest picture. Major cities have excellent hospitals. Rural areas and small islands have limitations. Most retirees use a combination of public and private care. In practice, this means public for primary care and prescriptions, and private for specialist appointments and shorter wait times. Most expats carry a private supplement policy at €60 to €120 per month for this exact reason. For that price, you get access to English-speaking specialists, same-week appointments, and modern private facilities in Athens, Thessaloniki, and Crete. One important additional consideration for citizenship after 7 years of residency, B1 Greek language proficiency is required. If EU citizenship is part of your long-term plan, Greek language learning isn't optional. Budget time and money for instruction from year 1. Catch 1. The bureaucracy is an A tier of ITSOW. Greek bureaucracy moves slower than anywhere you've lived before. FIP visa applications have been known to take 4 to 6 months from the Type D application at the US consulate to the residence permit in hand in Greece. If your window to apply for the 7% regime is January 1 to March 31, and your permit doesn't arrive until February, you have 6 weeks to get your Greek tax affairs in order and file the regime application. This is not comfortable. Timeline your move for a September or October arrival, complete your permit process, and be ready to file the tax regime application as soon as January 1 opens. This sequencing, planned 12 months in advance, is the difference between a smooth first year and a year of stress. Catch TWO, the €3,500 income barrier is real. Let's be direct about who the FIP visa does and doesn't work for right now. The FIP is designed for people with stable, passive income from abroad such as pensions or Social Security. To qualify, you have to show a monthly income of at least €3,500, about $4,100, plus extra if moving with a spouse. The average Social Security check is approximately $1,900. That does not clear the bar. Social Security plus a modest pension might. Social Security plus investment income might. But Americans whose only income is a single Social Security benefit will not qualify for the FIP visa at current thresholds. This is not a flaw in the system, it's just the honest math that most videos gloss over because it makes the story less clickable. Catch 3. The Golden Visa property pricing in desirable areas. If you're planning to buy in Athens, Santorini, Mykonos, or Corfu using the €250,000 minimum investment, that strategy does not exist anymore for those locations. The minimum investment for the Golden Visa is now €800,000 for properties in Athens, Thessaloniki, or islands with over 3,100 residents. That is $940,000 at current exchange rates. This has essentially moved the Golden Visa into wealth management territory for the locations most American retirees actually want to live in. The €250,000 and €400,000 tiers still exist, but they apply to commercial to residential conversions and rural properties on smaller, less developed islands. Know what you're buying before you wire the money. Catch 4. The property price trajectory is not reversing. Greece already has the highest housing cost overburden in the EU. A September 2025 analysis by Piraeus Bank highlights that Greece faces a shortfall of 180,000 residences, and even with ongoing development, closing that gap will take at least 5 years. Supply is structurally constrained. Demand from Golden Visa investors, digital nomads, EU remote workers, and now a wave of American retirees responding to the #1 ranking is concentrated in the same desirable locations. Key market trends for 2025 to 2027, prices for apartments, houses, and rental properties in Greece are expected to rise steadily, especially in cities such as Athens and Thessaloniki, as well as resort areas. The deal that exists today is better than the deal that exists in 2 years. That's not alarmist. That's supply and demand. Catch 5. The U.S. tax obligation doesn't disappear. This one catches Americans by surprise more than anything else on this list. U.S. citizens must continue filing U.S. tax returns regardless of where they live. Your 7% Greek tax is not a replacement for U.S. tax obligations. It's a foreign tax credit that offsets partially what you owe the IRS. The interaction between the U.S.-Greece tax treaty, the foreign earned income exclusion, Social Security taxation rules, and the Greek non-dom regime requires a specialist who understands both systems simultaneously. Budget $500 to $1,500 annually for a qualified cross-border tax accountant. This is not optional. It is the single most important professional you hire before you move. Ahead of the immigration lawyer, ahead of the real estate agent. Greece in 2026 works if your combined monthly passive income, Social Security, pension, investment income, rental income, clears €3,500 a month consistently and demonstrably. It works if you can commit to 183 days per year in Greece, because both the FIP visa renewal and the 7% regime require it. It works if you're prepared to time your arrival for a September or October move, giving you enough time to get your permit before the January 1st application window opens. It works if you hire a Greek immigration lawyer and a cross-border US-Greece tax specialist before you book a flight. And it works most powerfully if your total annual foreign income is above approximately €107,000, because that's where the 7% rate stops being a floor payment and becomes a genuine tax break relative to standard progressive rates. Greece in its current form does not work if your only income is a single social security check. It doesn't work if you're planning to buy in Athens or the famous islands on a budget under $940,000. And it doesn't work if you expect it to function like a simple tax form, because the sequencing, the residency requirement, the double tax filing, and the annual lump sum payment structure all require active management. None of that makes Greece wrong. It makes Greece something you need to understand completely before you commit to, which is exactly what nobody ranking it number 1 in December bothered to do thoroughly. Here's what's true. Greece has secured the top spot in the 2026 Annual Global Retirement Index by International Living, establishing it as the world's best place to retire. That ranking is earned. The climate is real. The food culture is real. The healthcare value is real. The community, Greece offers 8,000 miles of coastline, rugged mountains, wine regions, large cities like Athens and Thessaloniki, and more than 200 inhabited islands, is real. And a 7% flat tax on all your foreign income for 15 years, your pension, your Social Security, your IRA distributions, your dividends, is real. It's one of the most competitive retirement tax regimes in the world right now, with Portugal's deal closed and Italy's deal priced out of reach. Over the 15-year maximum duration, total tax savings for a higher income retiree could exceed 187,500 euros compared to standard taxation. That's not theoretical. That's the math at real income levels. But the January to March application window is real. The 3,500 euros monthly income threshold for the FIP visa is real. The non-EU sequencing requirement, permit first, then tax application, is real. The 800,000 euros golden visa threshold for Athens and the major islands is real. And the property appreciation that's running at 8 to 9% per year nationally and nearly 20% in Chania is real, and it is moving in one direction. The people who land well in Greece in 2026 are the people who understand all of this before they land. The people who get hurt are the people who watched a 3-minute video in December, saw, quote, 7% flat tax and, quote, number 1, and started making plans without reading the fine print. You just read the fine print. That's the actual advantage. Now, not every country that got bumped off the 2026 rankings deserved to be bumped. Some of them lost ground for reasons that have nothing to do with quality of life for American retirees, and some of them are currently offering deals that are quietly better than Greece for people whose income is below the FIP threshold. That video is right there on your screen. Because Greece at number 1 is the story everyone's telling. The countries that belong at number 2, 3, and 4, for the budgets most Americans actually have, that's the story nobody's finished yet.